Faced with steep tariffs, plummeting EV sales, and an unstable, unpredictable global market, German luxury brand Audi is trying to claw its way back from a 30% drop in sales in the first quarter of the year.
Audi's really been struggling in the US. They're on track for the third consecutive year of double-digit sales losses. And I mean, that's hard to do in a market that has been up, if not level.
The brand just unveiled the latest in an onslaught of products aimed right at the heart of the US market, the Q9 three-row SUV. We went to see it.
This is the Audi Q9. We also saw the high-performance SQ9, which they also revealed today. And there's a bunch of best-in-class metrics on this, some best-in-class performance numbers. These are smart headlights that have been available in Europe and elsewhere, but not in the US. They're finally bringing it here. There's also a bunch of other stuff, like some OLED lighting on the tails and some turning signals that can actually reflect on the ground when you activate them.
With these three launches, Audi says it will have the youngest premium SUV lineup in the US.
If you look at our recent introductions, whether it is the Q3, whether it is this car, it really plays right into the center of what's happening in America. SUVs keep growing. It's over 80% of the premium space. And we have absolute top contenders in each and every part of those segments.
Here's how Audi compares with its closest German rivals. It's a role reversal for a brand that historically had been a formidable competitor to BMW and Mercedes-Benz.
Audi, for decades, was kind of nipping at the heels of what used to be a duopoly of German OEMs. And through the years, it had increased its market share.
Ever since 2020, the brand has struggled. And that includes vehicles that have not done well in studies like J.D. Power Initial Quality. The brand has been last in many of these surveys.
Audi blamed its first quarter drop primarily on tariffs and the end of federal EV subsidies.
That is what's hurting auto sales for these German OEMs in the US. It's a combination of them needing to have to offset the tariffs by raising their prices effectively and, competing with other alternatives, American companies that are selling SUVs at lower pricing.
The price hikes are especially hard on Audi. Historically, it had many strengths, including a pioneering all-wheel drive system and highly acclaimed interiors and tech. But value for dollar was always at the heart of Audi's pitch. Customers got a lot for what they spent.
It was kind of a lower-priced German alternative to the duopoly, so to speak. That's what it had as at its core to the buying decision for decades.
All three companies import many of the vehicles they sell in the US, but both Mercedes-Benz and BMW have US factories. Audi has none. Neither does stablemate Porsche. Audi executives have said the brand might move some production to VW Group's Scout factory in South Carolina, which is scheduled to open in 2027. And like other Volkswagen brands, Audi dove into EVs.
A lot of manufacturers were caught out by this, but Audi's probably one of the more substantial ones in terms of how much energy and resources they put into and expected to get back from the electric car world, and how far those realities fell from expectations.
So how much can these new vehicles help? Sales of two of Audi's SUVs grew considerably in the second quarter of 2026.
It's definitely a positive. It should help. But the larger picture item of tariffs, how that impacts the brand, I think that will still dominate their performance in the US.
Narayan expects Audi to sell maybe 20 to 30,000 Q9 SUVs in America annually. That's a fraction of the nearly 165,000 vehicles it sold in the country in 2025, which, by the way, was a 16% decline over 2024. And the three-row full-size segment is crowded. Even American automakers are competitive here.
This is not going to be a massive high volume seller, but if it's a high profit for each one they sell, then it can still make a substantial contribution to the bottom line for the whole company.
So for VW Group, it's still less than, I think, 10% of the vehicle sales is the US. I do think the US is important. It's a market they could potentially grow. It's a strong, healthy consumer, more so than Europe. And China right now is super competitive. I think we should also not forget, these are great cars, right? There is demand. There is a premium put on German engineering.